Hi guys, welcome back to Homebound Canada. Very glad to have you back. This is your YouTube channel for all things home buying, home owning, real estate, and even home maintenance tips right here in Canada. I'm very excited about today's video because we're going to talk about something that will get you one step closer to home buying or home owning, which is your mortgage. Yes, we'll be talking about the devil today, which is your mortgage and how to get that pre-approval for your mortgage. We'll talk about everything one by one. What are the documents that you will require? What do you need to be mindful of before even stepping into the bank to get your pre-approval done? So I will not waste a lot of time and I will dive right in and help you understand what is it that you will require to get that pre-approval. First things first, you will need your IDs, identification, I-card, government ID, whatever you want to call it. I've already mentioned in my previous videos that right now in Canada, if you're not at least a permanent resident of Canada or a citizen of Canada, you cannot own a property or buy a home. So in order to prove that you are indeed a permanent resident or a citizen of Canada, when you go for your pre-approval, you'll have to show two pieces of ID. This should be government ID. Generally, the widely accepted IDs are your passport or your citizenship card. If you're not a citizen yet and you do not have a Canadian passport, you can always show your driver's license as your second piece of ID, but your primary and your first piece of ID should be something that proves your residential status here in Canada, that you're at least a permanent resident, which is your PR card. So whenever you're going for your pre-approval, you need to have these two pieces of ID ready with you. What I submitted was my permanent resident card as my primary identification, and as my secondary identification, I presented my driver's license. Now that we have discussed government IDs and identification, what you should present when you go for your pre-approval, moving on to the next thing that you will need is your proof of employment income. So you have to be prepared with your salary slips or your pay slips or your pay stubs, whatever you want to call it, when you go for your pre-approval. You should be prepared with at least 3 recent months of your salary slips or pay stubs. Whenever you go for your pre-approval, this is something that will be asked, that you'll be asked to present or show as a proof of your income. It is very simple for salaried employees because they can just show their bi-weekly pay stubs or their monthly pay stubs or paycheck, and that can determine the affordability of your mortgage, or is the part which determines the affordability of your mortgage, is one part of it. For people who are not salaried incomes or are self-employed or are freelancers, what they can do is they can present their notice of assessment, which can be found on the CRA website. It's nothing but your income tax filing of the last at least 2 to 3 years. Since you don't have your regular paychecks here or your proof of regular monthly income, since you're a freelancer or you're self-employed, your income tax return is something that can prove that you can afford this mortgage. So if you're a freelancer or you're a self-employed person, be ready with your notice of assessment before stepping in for that pre-approval process. Personal favorite topic, and I'm very excited to talk about it as well, is the down payment. And yes, you'll be asked to show your down payment savings when you go for that pre-approval in the bank, or your pre-approval stage or your process, whatever you want to call it. So you'll have to show how much you've saved for your down payment. As many of you may know or may not know, that 5% of your total purchase price is generally approved as a down payment if you're a first time home buyer in Canada. But if you can, and if you can afford, you should try and pay up to 20% of your total purchase price, just to eliminate that mortgage insurance that you'll have to pay every month along with your mortgage. If you pay up to 20%, it will significantly reduce your monthly mortgage amount. So if you can, you should try and go for the 20%, but if not, 5% is totally okay as well. Obviously the down payment is important, but what you should also keep in mind is your closing cost money required to close on a house, which may include fees as your lawyer fees, your mortgage broker fees, your real estate agent fees, whatever it may be. So that is also accounted when you go for your pre-approval process. So you'll have to show your savings account, and you have to show that you have enough money for the down payment and closing cost. A very good thing, or a very good account to save your money if you're a first time home buyer, is something called FHSA, which is First Home Saving Account. It's very evident in the name that this is a privilege available to first time home buyers in Canada, and this account is completely tax free. So I think this is something that you should really take advantage of if you're thinking of buying a new home and starting to save for your new house. The contribution limit for FHSA is $8,000 a year, which is not bad at all. I did the same thing. I saved around $8,000 in my FHSA account, and the rest of the money was saved in a different savings account. But yeah, FHSA is a great investment account. It's a great tool if you want to save for your first home. What you can also do is, if you want to save some more money, some extra money, because no extra money is bad money when it comes to home buying, you can also open up a separate savings account in your bank, or you can also open up some cash account in these apps like Wealthsimple, where you can invest some amount of money every month, and you also get some interest paid in that money, and that's how you can save more money for your down payment and try and reach that 20% mark for your down payment. Home buying doesn't come without stress, so it's important that we talk about stressful things as well, so that we can be prepared beforehand. So let's talk about debts. Many of us, especially who are in our late 20s or early 30s, may have some loans that we pay every month. Either it's your student loan, or you bought a new car, so you have a car loan. Also, we have, let's all agree and admit that we have a lot of spending power when credit card is in our hand. So we may have some amount, if not a lot of amount of credit card debt as well. All these things are important when it comes to pre-approval, because all of these things which I just mentioned does determine how much of mortgage you can afford, or if you'll be approved for a mortgage at all. So if you have any car loan or student loan, that will be taken into account when you go for pre-approval, and after running some numbers, you will finally get to know how much of a mortgage you can qualify for. So just make sure that you have adequate information regarding your student debt or your car loan debt or even your credit card debt when you go for pre-approval, and talk this through with your mortgage broker, whoever you are going to, and then that will indicate how much, or that will help you understand how much of a mortgage you can afford. I think now we're ready to talk about Canada's favorite topic, and I love mocking Canada and all Canadians, I'm sorry, when it comes to this, which is credit score, because it is a great thing. Don't get me wrong, it is important, and it helps us keep in check when it comes to maintaining a credit score, because now we are so aware and cautious about it. But having said that, it's also very important to maintain a good credit score. Even to rent an apartment, your owner will ask for your credit score, and that will make him or her decide if they're ready to rent that house to you or not. So you can only imagine how much it's important for home owning. And similarly, when you go for your pre-approval, your credit score will be checked. And if you have a below average credit score, I think it is very tricky and it will be very difficult to get your pre-approval. So before you think of going for a pre-approval, you have to make sure that you maintain a good credit score. If not like excellent, at least it should be in the good or above average area, so that when it comes to your pre-approval, there are no issues because of your credit score. One thing I'd like to talk about, which I completely forgot and I should have talked about when I talked about down payment, was many people also get financial help from their family or their parents, and which is totally okay when you go for your pre-approval stage. You just need a letter saying that your parents will be gifting you the money, and that letter can be shown when it comes to pre-approval. Sometimes just telling them is enough, but it's better to be prepared and go with that letter beforehand, signed by your parents, that I'm willing to give my child this amount of money for the down payment. The letter should mention exact amount they are giving you as a gift, and then you should take that letter with you when you go for your pre-approvals, just to avoid any issues. It's not that complicated. You just have to make sure that you have that letter in hand, ready to go. If you're still watching this video, thank you so much for sticking till the very end. I hope that whatever we talked about in the video helped you understand what you may need when you go for that pre-approval, and it has cleared some of your doubt, if not all. And I wish you all the best for those who are going for the pre-approval, and I hope that you get your pre-approval as soon as possible. I just want to say that it's not a 100% guarantee once you get pre-approved that your mortgage will get approved as well. Pre-approval definitely takes you many steps closer to getting your mortgage, but once you get a pre-approval, there will be certain steps that will have to take place in order to fully approve your mortgage. But having said that, you are definitely 95% there. So that is why your pre-approval stage is so important when you go for your mortgage. So wishing you all the best one more time if you're heading for that pre-approval anytime soon. And with that, we come to an end for this week's video. If you like this content and if you want to be up to date with all things home buying, home owning and real estate in Canada, please hit that like button, subscribe to that channel, and please comment if you have anything, any questions, anything to ask, or if you have any feedback also. Thank you very much again for sticking till the very end, and I'll see you next time.